This will blow the top off crypto. So in today's video, we're going to break down how the SEC right here got slammed for gross abuse of power. We're also going to talk about the Bitcoin halving and also the looming interest rates. Will they lower interest rates with inflation of where it's at? So that's what we're going to break down in today's video. My name is Coach JB. What I work to do is make very complex macro and microeconomic strategies very simple so the normal everyday person can implement them. We get hundreds of questions around how I insure my wealth. So down below, I set up a free consultation with my licensed insurance team in all 50 states. It's an absolutely free consultation, and we share with you the benefits of insuring your wealth, insuring your life, and your family. Also, I have an absolutely free book that shares with you exactly how my patterns are set up, my 5 pillars of wealth. Okay, so the first thing that we're going to talk about, that's in the description of the video or in my social media platform. Just click the link. So judge slams SEC for gross abuse of power in crypto case and imposes sanctions on the SEC. Now, this was about the case with Debtbox in July, and they actually put sanctions on the SEC. Now, why do I share this? Because it shows that the tides are shifting. What's done in darkness will come to light in 2024. Guys, this is the season of change. What's done in darkness will all come to light in 2024. That is why you're starting to see a shift into Bitcoin. That is why you're starting to see a shift into cryptocurrency. That's why you saw BlackRock shift into an ETF around Bitcoin and go from its use for money laundering to now a flight to safety. So first, we're going to show this video on the Bitcoin halving, and then I'm going to share my narrative, what I think is going to happen with the Feds and interest rates.
All right, so Bitcoin set down to go yet another halving event, probably sometime in the next month. And you got to take a look at this because it rallied like huge after the last one. This, I think, will be the fourth one to bring a Pomp Investment investor, Anthony Pompliano. And, you know, this halving thing, explain to the audience, or at least let's try to explain to the audience what it is. So we have here the last time it happened. And you can see where Bitcoin was like a 10 grand, sort of, you know, now we're at 70,000. Seems like it could be a good thing.
Let's go back, supply and demand, right? If you have a supply and demand stays constant, but supply gets cut in half, obviously the price has to adjust to accommodate everyone. That's what happened back here in 2020. Bitcoin's trading about $8,000. We got a supply that cut in half, and then obviously price runs. Now, what's interesting is right now, 900 Bitcoin per day are being produced. If you think in kind of gold terms, that's literally gold being dug out of the ground. This is Bitcoin being produced. It's net new Bitcoin coming into supply. But when we hit this halving occur, we're going to go from 900 to 450. Now, what's interesting is right now, there is the equivalent of 9,000 to 10,000 Bitcoin per day in demand. So already we're at 10x more demand than supply. That's this huge price increase that we've seen.
Okay, so it's simple supply and demand, guys. Now, whatever you believe about Bitcoin or believe about cryptocurrency, it's supply and demand issue. Now, think about this. You may see, oh, it's fake. It's internet money. It's just, but what is the fiat dollar, guys? It's fake. The fiat dollar is fake. Every dollar in the system is debt. It's someone else's debt. So my money is my income is your debt. Your debt is my income. There is no money in the American monetary system. We're at 120% debt to income ratio. So I use diversification. I have cryptocurrency. I have a little bit of fiat. I have, started to get into real estate. I have businesses. We have precious metals, and we love insurance. We love to be at the bottom of the risk pyramid. So this is interesting right here. Inflation frustrations may prompt Fed to dial back rate cut outlook. So U.S. Central bankers are not expected to cut the borrowing costs this week, but their new economic projections may be a wild card, potentially signaling fewer interest rate cuts and a later start to the policy easing than previously estimated. Because I believe that these potential in 2023 going into 2024 was priced in for, I think it was 3 rate cuts, but they're backing off, guys. Inflation is not cooling like they thought it was going to. So the good news about this is with the Bitcoin halving, then we have them cut interest rates before the presidential election. You got to be ready. Your crypto is going to go straight up. Your stocks are going to go straight up. Your real estate is going to go straight up. So let's listen a little bit more about the Feds on the sidelines.
What this means for the Fed's calculus, because the February PPI print showing that inflation still remains sticky. Top line and producer price rising 0.6% on a monthly basis. That was more than what forecasters have been expecting. We also got a read on the consumer this morning. Retail sales rising in the month of February, rebounding from the decline that we saw in January. Also pointing to the fact that shoppers are still out there spending. So let's talk about what this all means for the path forward for the Fed. For that, we want to bring in Lindsay Pieggs, the chief economist with Stifel. Lindsay, it's great to have you here. So we've been scratching our heads a little bit just in terms of the fact that traders are still pricing in 3 rate cuts between now and the end of the year. Is that your base case, or what do you think the Fed is likely to do on the heels of these latest prints?
I think given the stickier than expected nature of inflation, it's going to be very difficult for the Fed to justify a near-term rate reduction.
Listen.
Our base case is that the Fed holds off to the second half of the year before initiating a change in policy. Now, the market, as you mentioned, has capitulated from at least a March rate hike out to June. But I think even that is overly optimistic, again, given the latest inflation data, suggesting that we may continue to see the Fed on the sideline for much, much longer than expected if we're unable to see evidence that inflation is retreating.
Okay, so what they're saying right here is if inflation doesn't come down, guys, this expected 3 rate hike cuts, we should have had some already. They're going to wait till the back end, and they'll do it before the presidential election, which is great news for a crypto investor because you have the Bitcoin halving. Then you're going to see, I think it's about 90 days. Maybe you guys can comment down below. Some of you guys are, do the charts and stuff. But basically after that, you start to see a wave up in Bitcoin, and then all that profit floods into alternative coins, all the other coins, right? But if they lower interest rates during that time, guys, do you realize what's going to happen? People are going to run from the US dollar into assets, and then you're going to see a parabolic move on the fourth quarter of 2024 going into 2025. Okay, so on the back end of every video, I share with you guys exactly what I'm doing. So what is this on the screen here? So it's our dummy account for Merlin. I'm one of the co-founders and creator of Merlin. 36,000 lines of code that we created this. Now, why did we create Merlin? Because we used to carry around spreadsheets. We're really big in our Warrior Academy about exit plans. The reason why is because we saw thousands of people get wrecked in cryptocurrency from 2021 to 2022. What goes up comes down really, 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 really hard. Wall Street wins 100% of the time. You do not have profits, or you didn't make money unless you pull profits. Now, a couple things you want to take a look at, consult your tax professional, is short-term and long-term capital gains. After 12 months is long-term, under 12 months is short-term. There's a big difference in how much you have to pay in taxes for your cryptocurrency, okay? But if you are in long-term capital gains or whatever you choose to do, which you can put your tax bracket inside here, you can set up exit targets. And what it does is it's just an interface. We don't hold your keys or combos. It just shows you all your crypto in one place. Then you can set up your exit targets. And so I'll give you an example. Shiba is a small percentage. I have some of the, I call them shit coins in my portfolio. It's a weighted percentage in my portfolio. And Shiba started to run up, and Merlin sent me an alert, and I hit 2 exit targets. So I exited, put the money on the sideline for taxes, and I have that profit sitting there. And what I personally do for me, what works for me is I max fund my index universal life policies. I'm a big fan of IUL. I'm a huge fan of it. I use it for myself. So I have multiple policies set up ready to max fund for this bull run. So the reason why I do that personally, because I like security. And at the bottom of a risk pyramid is insurance, right? Go look up how much money banks have in insurance. Go look up how wealthy people, they love to insure their wealth. I have my money insured. So basically I pull profits, I put it into insurance. Now, the reason why I do that, they're not retirement accounts, it's insurance. They're cash value policies. So I can borrow against the cash value tax free. Okay. And I can buy back in when it dips, or I can buy real estate, or I can buy more businesses, more asset generating tools, right? For example, the last bull run, we invested in more companies, we built more companies, and we took the cash flow. We didn't buy a bunch of Lambos and Ferraris. We actually put more into cryptocurrency. So there's a risk pyramid. Okay. On the left side of the risk pyramid, it goes up. And at the top, you could put crypto up here. It's super risky, but potential for growth is huge. I pull from the super risky when it profits, and I pull it down the risk pyramid to the bottom of the risk pyramid, which for me is insurance. And then I borrow against the cash value to go back into the risk pyramid. And I come back down the risk pyramid. That's what I'm doing. And I did it from 2020 to 2022. And then when the bull run collapsed, I've been dollar cost averaging into crypto since 2022 to now. And then now I'll repeat that process. And each time my wealth continues to increase, right? Well, during that time as well, I'm building businesses, creating cash flow. So the goal is to create cash flow, right? Pull profits, get into things that secure your wealth, borrow tax-free to buy cash generating assets. And you buy your liabilities with assets. You don't buy your liabilities. You don't buy cars and Ferraris and things with your own money. You buy an asset that pays for the liability. So it's about rewiring the brain. So that's what I was doing. That's what I've been doing. And that's what I'm doing going into 2020, finishing 2024 into 2026. Now, I don't care when the bull run ends. I care when I hit my price targets. Now, I'm holding 50% of my crypto long term. I'm not touching it. Now, the reason why I'm doing that is because, you know, they call them moon bags, right? Just in case, boom, it explodes. I have a moon bag there. And number two, for legacy, right? And then I can stake for interest, free income, and then I can borrow and collateralize some of it to get more tax-free money. And then I buy more cash generating assets and just keep repeating that process, right? So I'm diversified across different platforms. So I'm not weighted in just crypto. I'm not weighted in just business. I'm weighted across the platform so that if something falls back or, you know, and I'm not heavy in fiat. I usually, when fiat hits my account, we pay our bills, we have our businesses, and then I move that fiat to assets. So that's how I do mine. So it's worked for me, and it's worked really, really well for me. And it's something that I had to rewire my brain. The Richest Man in Babylon was the book that really, really changed my life, and also Intelligent Investor. I always call myself a Warren Buffett style investor in crypto. I don't chase pump and dumps. I'm not chasing meme coins. That's very, very, to me, that's very addictive behaviors. It's unnatural. It's not good for the brain, and it creates really, really, really bad habits. It's just like going to the casino. You hit big, and you think you're going to keep doing it, and then you end up losing everything. So I don't even play in that realm. I don't play chasing pump and dumps. I don't chase all this stuff. Fundamental, real world solve. You know, I have Dogecoin and Shiba. That's probably the only meme coin. That's only meme coins I do have. And then from there, I pull profits when they go up. And I pulled my initial investment out though, so it's all house money. So anyways, love you guys. Appreciate you. As we always say, warriors, rise, get your shit together. Let's go.